So picture this, early 2026, and the chip giant Intel just dropped its fourth quarter earnings report, and they absolutely crushed it. They beat all of Wall Street's expectations. You'd think it would be a huge success, right? Well, that's when things got weird. The market's reaction was, to put it mildly, not great. This is the story of a paradox, how a fantastic report card led to a tumbling stock price. And I mean, the reaction was immediate. In the hours right after the announcement, Intel stock just plunged. We're talking a nearly 6% drop, 5.72% to be exact. It was like investors saw a ghost in the machine, something in the numbers that wasn't obvious at first glance. A sea of red for a company that should have been celebrating. And that really brings us to the core mystery we're unpacking today. The numbers looked fantastic, the executives sounded pretty optimistic, but the stock just took a complete nosedive. So what on earth did Wall Street see that made everyone hit the sell button? What exactly went wrong here? Okay, to figure that out, we have to start with the good news, because, before the big drop, there was a seriously impressive win. Let's dig into the numbers that should have had investors popping the champagne. And this is what's so wild. Just look at how decisively Intel beat the forecasts. I mean, they topped revenue expectations, which is great, but the real stunner was the earnings per share, or EPS. Wall Street was betting on 8 cents a share. Intel came in and delivered 15 cents. That's nearly double. This is the kind of blowout performance that usually sends a stock to the moon. Intel CEO Lip-Bu Tan was out there framing the quarter as a huge win, a real step forward. But listen really closely to the second half of that quote, despite supply constraints. That was the very first clue, a little breadcrumb suggesting that behind these amazing numbers, some serious problems were brewing under the surface. And those supply constraints, well, they're the key that unlocks the second part of our story, the forecast shock. Because in the world of investing, what you did last quarter is history. What everyone really cares about is what you're promising to do next. And right here, this is the slide that caused the meltdown. On the left, you've got that awesome $13.7 billion revenue from the fourth quarter. But look to the right. That's Intel's guidance for the next quarter. They projected revenues somewhere between 11.7 and 12.7 billion. That midpoint, 12.2 billion, represents a massive, steep drop-off. Investors saw that cliff, and they just slammed the panic button. So the multi-billion-dollar question is why? Why was that forecast so weak? Well, it all comes down to a perfect storm of manufacturing headaches and supply chain chaos. Let's peel back the curtain and see what's really happening inside Intel's factories. It really boils down to 3 main culprits. First, after a really strong 2025, their safety stock of chips was basically gone. There was no buffer left. Second, they're shifting production to prioritize those super high-demand server chips, but that new output won't actually be ready to ship until late in the quarter. And third, the big one, they're still wrestling with some persistent manufacturing challenges. Now, that last point really hinges on this super important term, wafer yield. Okay, so imagine you're baking a giant sheet of cookies. That's your silicon wafer. The yield is just the percentage of perfect, non-broken, sellable cookies you get off that sheet. The higher your yield, the more efficient you are, the less money you waste, and most importantly, the more chips you have to sell. A low yield is a huge, huge bottleneck. And here's the CEO again addressing it head on. He's basically saying, look, we knew the yields would be at this level. It's not a surprise to us, but they're still not good enough. It's a remarkably candid admission that their manufacturing engine, which was once the absolute envy of the tech world, is very much still a work in progress. But look, Intel isn't just sitting around hoping things get better. Faced with all these challenges, they've laid out a really bold, multi-year comeback strategy. They are making 3 absolutely massive bets on where they think the future of computing is headed. Bet number 1 is all about the AI PC. The big idea here is to put powerful AI processing right inside your laptop, instead of having to rely on the cloud. Their new Core Ultra Series 3 chips are the engine for this whole vision, and they're already powering over 200 brand new notebook designs. They're betting big that you and I will want to upgrade our machines to run AI apps right on the device. All right, their second bet is to double down hard on the data center, which is basically the engine room for the entire AI revolution. They're simplifying their product line to focus on pure, raw performance for AI workloads. That means they're prioritizing beastly new chips, like their upcoming Diamond and Coral Rapids families, to try and meet that just insatiable demand from the big cloud companies. Now the third bet. This one is by far the most ambitious. Intel wants to become a foundry. What that means is they want to use their cutting-edge factories to build chips for other companies, maybe even for their direct competitors. It is a massive, incredibly difficult undertaking, all aimed at creating a world-class chip manufacturing service right here on U.S. soil, built on their most advanced tech. So you see it, right? Intel has a clear plan. But we all know that the road from a good plan to a successful reality, well, it's a long one and it is full of uncertainty. And that brings us to the core tension at the heart of Intel's story today.
You know, the CEO admits it himself. This is a multi-year journey. It's a marathon, not a sprint. Rebuilding a company of this size and complexity, especially its manufacturing edge, is going to take an enormous amount of time, money, and frankly, patience. The commitment is there, but the results, they are not going to be overnight.
And that leaves us with the final, crucial billion-dollar question. The AI boom isn't waiting for anyone. It is exploding right now, and competitors are moving at lightning speed. Intel has a really compelling, ambitious plan for a major comeback. But in a race this fast, the biggest question isn't whether the plan is good. It's whether they can pull it off fast enough to even matter.